My favorite trades involve breakouts from consolidation. How do I avoid false breakouts? You might be surprised by my answer. Watch the video. Hi, this is Tim from TradingStrategyGuides.com. I'm still having a bit of a problem with my voice. I appreciate you guys putting up with it for the last week or so. Hopefully it will clear up this week. I had some really great comments on last week's videos. Thanks for your input. You guys are the best. I've got a new challenge for you today, so be sure to hang out till later in the video and find out what it is. Today I'm going to tell you what I do to avoid false breakouts. And in my typical manner, it'll probably be controversial, so don't miss it. After that, I've got a setup on the Australian dollar US dollar forex pair. It looks like it could be heading to the downside. I'll show you that. But first I want to update you about our weekly US dollar Mexican peso setup that triggered on Friday, and then later on we'll talk about the trading maxim for today. I know this is not a popular statement, but I love Mondays. Let's do this. Remember to click the subscribe button and hit that bell so you don't miss any of these great Forex setups. Let's get on with the charts. Back at the beginning of November, I showed you this triangle on the weekly US dollar Mexican peso Forex pair. We got a sell trigger on Friday with 95% volume right here. So I sold a half-size position at 19.01337. The stop loss is 19.53189 and the first target is 18.66769. Let's see where this goes. You may remember from last week's video that I've already gotten profit on the Kiwi Swiss, and now I'm just watching to see what result we would have gotten from using the parabolic SAR to follow stops. Doing that, we would move our stop up to this point right here, which is the current parabolic SAR point at about 64.40, locking in 51 pips. This stop would have made us more profit than we actually got on this second half, since my stop was a couple of pips below that right here. We'll continue to track this and see what it does. A couple of weeks I showed you this bear flag on the Euro Swissy. Friday we had this huge pin bar right here on great big volume. That means a significant number of traders don't want this thing going up. So watch this one to trigger a sell in the next week or so. Okay, I'll show you the Australian dollar US dollar setup shortly, but first I'm going to talk about avoiding false breakouts. So I'll bet you want a magic formula for avoiding false breakouts, right? As you know, I have a penchant for being controversial. So here's my controversial statement. You can't avoid every false breakout. If someone tells you that they have a magic formula that avoids all false breakouts, they're lying to you. I've said it many times. There is no way to know what the market is about to do. What we do as traders is to take advantage of statistical edges in the market. Little patterns and clues that tell us the market is going to do a certain thing. But it's all based on probability. These patterns and clues don't ever work out 100% of the time, and that's why we manage our risk on every single trade, because there are no sure things. Okay, now that I've said that, there are things you can do to increase the probability that you're not going to get tricked by a false breakout. Here are the things I look at. Number one, I want to see declining volume and volatility on the consolidation before the breakout. That means fewer and fewer traders are playing ball. Fewer traders are willing to risk money on the price staying within the consolidation. Number two, I want to see a candle close outside of the consolidation. I believe candle closes, especially daily and weekly candle closes, are very important events. Day traders like to square their positions at the end of the day. If a day trader happens to be bearish on a certain day and he's done for the day, he'll close his open shorts, which is essentially a buy, causing the price to pop up. If the price is pushed below the consolidation during the course of the day, the price will often retreat back into the consolidation after day traders square their positions. So a daily close below the consolidation means longer-term traders are selling. And of course, the reverse is true for bullish breakouts. Number 3, I want to see significant volume on the candle close outside of the consolidation. If the volume is declining during the course of the consolidation, then a volume spike on the candle close outside of the consolidation supports the fact that more traders are interested in the move. As you know, I like to see a spike of at least 100% of the average volume to enter a full-size position, but I will enter a half-size position if there is at least 75% of the average volume. I use a 20-period simple moving average on my volume, so that represents about a month of volume data on most markets. And lastly, if you get caught in a false breakout, and you will get caught in one eventually, as soon as you realize that you've been head faked, close the trade. In other words, as soon as you get a candle close back inside the consolidation, shut it down and watch it. You may have another opportunity to get a real breakout. Don't immediately give up on it, especially if you see the volume and volatility continue to drop. Taking a small loss early on will help you make it up on the real breakout. And that, guys, is my formula for avoiding false breakouts. Remember, you're not going to avoid 100% of the false breakouts. It just isn't going to happen. But following these 4 rules will give you a leg up on the breakouts. Okay, guys, I am really excited about this thing. I had a question on one of last week's videos about using options to trade some of these stock setups I show you. Now, I typically try to stick to analyzing lower cost stocks so you don't have to be a gazillionaire to take these trades. But that limits us in that we can't look at some of the really good opportunities. And even a $50 stock would tie up at least $10,000 to take 2 100-share contracts, so they have to be really cheap stocks. Now, understand, I am no options expert, but our fearless leader, Casey Stubbs, is definitely an options guy. And he told me that if I could get at least 150 likes and 20 comments on this video, he would work with me to develop a strategy to take advantage of my trade setups using options, which could be done with a much, much, much smaller account. Okay? Okay, let's do it. Time to take a look at the Aussie dollar, US dollar trade setup. I really like this bearish wedge on the daily Aussie dollar, US dollar Forex pair. It's well defined, but not particularly mature. That means that it's a relatively new pattern. That doesn't mean that it can't break at any time, though. On wedges like this, I sort of like to find support and resistance level that could affect the price movement. The price is currently stalling at this 69.23-ish level right now with this powerful rejection candle on Friday right here. Now this price could continue to push down and break out right here, or it could push on up and break out from that level, or anywhere in between, or anywhere afterward. I do expect this thing should break before April, as long as the status quo continues. Here's the trade plan. We will sell a daily candle close below the bearish wedge. On the breaking candle, to enter a full-size position, I want to see this volume bar reach up as high as the volume average right here. If it doesn't quite reach the average, but does reach at least 75% of the average volume, I'll open a half-size position to reduce risk. You can calculate the percentage by dividing this volume number right here by the volume average, and you should get 0.75. If you don't get at least 0.75 on that, stand aside on the trade. Stop loss, as always, will be 1.5 times the ATR. First target, 1 times the ATR. So let's say this thing breaks right here, and this is the close, and that will be your entry level. On that day, you look down here at the ATR, multiply it by 1.5, and measure that distance up here above the entry for your stop loss, and then measure 1 ATR below the entry for your first target. If after entering the trade we get a candle that closes back inside the wedge right here, we will take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout of this pattern should be explosive and hit our target fairly quickly. If the momentum goes away, demonstrated by a candle closing back inside the consolidation, we want to shut the trade down without taking a full stop if possible. When our price hits the first target, we will close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. Now these two rules, closing early and taking half off at first target and allowing the rest to run, are the very definition of cutting your losses and letting your winners run. Typically I do this using two positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. The second position will only have a stop loss associated with it, and that's the position that will be allowed to run. When the first target is hit, we will have to manually move our stop loss up to break even on the second position. Remember, I will only risk about 2% of my account on each trade, and that's the new setup on the Aussie dollar US dollar forex pair. My intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And that's my intent for the trading maxims as well, to help control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading to make sure that you always do the right thing. Feel free to borrow from my list. And today, Tim's trading maxim number 25. Trading is a marathon, not a sprint. If you think trading is a get-rich-quick proposition, then you're in the wrong place. We just don't say that stuff here because it isn't true. If you want to make a living as a trader, you need to go through the process. It takes time to find a strategy that works well for you and that you have thoroughly tested and in which you have complete confidence. Take the time to get it right, and as I mentioned a few weeks ago, you may spend a few months getting it, but once you have it, you will have it for the rest of your life. Remember our daily Aussie dollar US dollar trade plan here. We're going to sell a daily candle close below the wedge. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. Sign up for my free Trading Picks email list to be sure you don't miss any of these great trading picks. I send out about 3 or 4 trading picks a week from all different markets, and you'll get to see them first. And the best thing is, it's free. I'll put the link below this video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. We'll have a nice trade setup or two on each one and maybe some Q&A or training. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video or both. And remember, the only stupid question is the unasked one. And don't forget that I need 150 likes and 20 comments on this video so that Casey and I can work together to get an option strategy to take advantage of these stock setups. As always, thanks for watching, thanks for subscribing, and don't forget to hit the thumbs up below. Have a great week, and I'll see you next time.